Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update, and we got some not bad news. It's not doing too shabby. This is going to be sitting at 5/12/2022, and what we're going to do is we're going to price out 5 different mortgaging products. We're also going to be talking about where the most of the lending has gone to in Q1 of this year so far, because let's just face it, it's definitely not in residential unless it's a multi-unit. And I'll tell you that in a second. So what we're going to do is we're going to go ahead and price out 5 different mortgaging products. It'll be a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. If you don't know what a 5/1 adjustable rate mortgage is by now, it is interest only fixed for 5 years. Then it gets adjusted every single year according to the rate and the cap on your product. So let's get on with it. 30-year fixed will be sitting at 5.35%. That is 0.06% better pricing than yesterday, 0.27% better pricing than 1 week ago, 0.23% increase in pricing from 1 month ago, and 2.22% increase from 1 year ago. 15-year fixed will be sitting at 4.75%. That is 0.03% better pricing than 1 day ago, 0.15% better pricing than 1 week ago, 0.38% increase in pricing from 1 month ago, and 2.18% increase in pricing from 1 year ago. 30-year FHA will be sitting at 5%. That is 0.12% better pricing than 1 day ago. That is 0.19% better pricing than 1 week ago, 0.35% increase in pricing from 1 month ago, and 2.32% increase in pricing from 1 year ago. 30-year jumbo will be sitting at 4.58%. That is 0.02% better pricing than 1 day ago, 0.17% better pricing than 1 week ago, 0.25% increase in pricing than 1 month ago, and 1.41% increase from 1 year ago. 5/1 adjustable rate mortgage will be sitting at 4.52%. That is 0.05% better pricing than yesterday, 0.17% better pricing than 1 week ago, 0.5% better pricing or increase in pricing from 1 month ago, and 2.22% increase pricing from 1 year ago. Now, majority of people don't actually realize that mortgages don't necessarily run off an adjustable, whether it's a 3, 5, 7, or a 10. It actually goes to 8. On the bigger side of things, like 30-year fixed rate mortgages, majority of people think, okay, 30 years as long as you go. Well, you could actually technically go all the way up to a 40-year. This will be mostly on investment loans, but it's investment loans, and you could go interest only. You could go a little bit more higher on that. Now, a lot of people don't understand is that what started getting sold back in 2015 is what's called a 50-year bond. Now, the way that the course of real estate is going right now is if the supply chain really does stay limited to where it's at right now, if everything stays as tight as it does, are we going to have to start implementing and going and qualifying people on a 50-year term? Now, a 50-year term, now majority of people also don't know is that the 30-year term, the reason why 30 years is usually the limit on a house, on a conventional loan, is because after the 30 years, because of course your house is made of wood, it needs a lot of renovation. So this is to keep updating and stimulating the market every 30 years. So if every single day you're buying, every 30 year comes up, construction workers are still in play, everybody's in play. So a majority of renovations usually come after a 30-year period. That's why we have a 30-year mortgage, which is the biggest one that you have. And then what we're gonna see is also who is buying most of these. Now, commercial and multi-family lending is exactly where they're at. Commercial and multifamily lending, and you guys don't understand how many phone calls I got from people like friends and clients and just people just trying to look for some help to try to get, because renters are honestly, they're getting kicked out by the masses. They're getting kicked out, and it's not their fault. It's not the landlord's fault, because tenants think that, oh, the landlord's just being a greedy bitch and he's just doing this, and it's not the tenant's fault because they don't all of a sudden miraculously make an extra $1,000 a month. So what's happening is that property taxes are getting reassessed. So since property taxes are getting reassessed, this is going to increase the total monthly liabilities that they have when it comes to going and paying property taxes. Then your insurance increases, and as your insurance increases, you're still leaving money on the table. Because let's just face it, if you're gonna go ahead and everybody else is renting a house for $1,000 more a month, and this is your house, right? Put yourself in that position. Everybody else is making $1,000. That's $12,000 a year. Let's say you have a triplex or a fourplex. That's $36,000 on a triplex, and then if you have a fourplex, that's what, $48,000. Who else is gonna give you that amount of money? Nobody is. It's just the nature of the game. So people are actually dumping money into the multifamily dwellings, because multifamily dwellings and commercial lendings, because it goes after 4 units, then we go into the commercial side of things. That's where most of the people are going, because we see the upside in actually buying. Because what's been happening is majority of homes, apartment complexes, and people that have these multifamily units, they've been hit so hard. These poor bastards have been hit so hard with people not paying their rent, and it's like 2-3 years. They're so upside down, they have no choice, including this guy right here. I had renters that didn't pay for over 2 years, and they cleared $150,000 in total income. And then you know what happens when you go to court? When you go to court, they go ahead and tell you to seal the court documents. They tell you that there's no money judgment because they want to do this and they want to do that, and then they owed over $100,000 in total back rent with fees and all that other stuff and court fees. But that's just the way that it is. So since people are seeing the upside in a market where a lot of people have been crippled, and you get to go ahead and capitalize on that, go buy those multifamily units, because now more eviction moratorium's over. You go ahead and spruce it up and sell it and rent it out for way more than what you should have. Yeah. So the volume of commercial and multifamily mortgage loan originations jumped 72% in the first quarter of 2022 compared to the year earlier. And that's a bit mainly because nobody was buying commercial or residential, because there was eviction moratorium and nobody wanted to touch that type of business. I did. If you want to sell your multi-unit family, link in the description below. Let me know. Hit me up. I'll definitely buy it from you. The Mortgage Bankers Association said lenders reported solid increases in all categories that are lending, with hotel properties leading the way at 359 reported solid increases. Now, what we're doing is majority of homes, no babysitter today, so we got the young lady here. Sorry, we had a little bit of a breakdown. Are you okay, Mama? Come here, my beautiful princess. Go, come on. No? Come here. Oh, my baby girl. Okay. So we got my little baby girl. Are you okay? Are you fine?
It's an iPad.
What happened?
An iPad.
Are you serious? You got the iPad?
Yeah.
Okay, so majority of people were actually just buying hotels, because what they were doing is they were to get out of, because there's rules and regulations as far as hotels go, as far as having them long-term rentals, but there was one way around it where hotel business took a really, really big hit, where people were going ahead and buying them and then just using it as an Airbnb, which actually made a lot of sense for a lot of people, and that's what a lot of people were doing. But as far as the mortgage rate update goes, that's exactly where we at. Office property lending has increased 30%. That's because majority of people were not in their offices, and everything is kind of like slowly getting back into normal. Is it ever going to be a time where majority of people will be back in the offices and it'll be stabilized just the way that it was? No, it's not going to, because the cost effectiveness and the effectiveness of people working at home is much more of a higher quality than it is actually jumping into the office. In the office, you don't really get too much, but if you have a babysitter, we don't have a babysitter. Today we're hanging out today, right? But that's gonna be as far as your mortgage rate update. 50-year mortgages might actually be a thing. You never know. It actually, the bonds have been getting sold, so why wouldn't it be a thing? Especially if everything projects it. So it's either gonna be, we're gonna kind of curve it on a 50-year mortgage, or it's just gonna go. Real estate market is down. And that's it. So for up to 50% commission rebate on purchasing your next home, 0% listing fee on selling your current home, or any mortgaging assistance, link in the description below. And if you like the content, like, subscribe, content, all of that stuff. And then if you want to see more of this one, Until next video, guys, I really appreciate you guys watching. Hey, me high five. Oh yeah. Mwah. Okay.